All right, guys, this is Trader Sabran here, and we are going to be looking at the analysis for the week 48. Last week was 47, and we're able to look at 46 actually. We're able to look at a few things. So we're looking at week 47 right now on the analysis. So we predicted that price was going to drop. So that's what happened. This is GU. I'm looking at GU, the weekly time frame. And many of you followed me on YouTube because of this analysis that we do consistently. And if you're new to trading, this is one of the places you want to learn how to analyze the charts, analyze a pair. Giving you an example of EURUSD and gbpusd. So that's what we do. And with that, you'll be able to understand how we look at the market. So first of all, we predicted that GU was going to drop even lower to break this low. So as we can anticipate, as we anticipated, we found out this week, the market dropped massively with a strong bearish weekly candle that created these 5 days trading days. 1, 2, 3, started from here, Monday, 1, 2, 3, 4, 5. Remember, I mark this area for you that whenever price break below this low, then we should be anticipating that price was going to target this low and this low. Obviously, we see that in the daily time frame. So the daily time frame, if you're looking at it right now, we are obviously strong bearish in the market. We have that price break that, retest and drop. So we're bearish right now. So what we should be looking at is a possible retracement of this drop. Probably price may drop even lower before it pull back and probably pull back into this area of structure, market structure, and then drop where we have this pivot level. Price could pull back into this pivot level, and then we'll be able to see price drop even lower this coming week. We should be anticipating that because of the US market, which obviously that under the regime of Donald Trump, we should be expecting that the market in the US market will rise even much more than we are seeing on the DSY, which I'm going to show you right about. Where is it? Let me just click on it quickly. Where's DSY? So we have DSY pushing up crazy to the upside, which obviously broke out of this cross structure, and then we are anticipating that price may want to continue to the upside on DSY. So we're anticipating that the push to the upside just resume. As you can see, market has been consolidating for a while, so now we can see a rally to the upside on the DSY. So this breakup structure might still continue pushing up until price may feel this imbalance level, which will make even British pounds to drop lower this coming week. So we're anticipating that because of this bullish candle that just closed. So we should have that price push up even higher this coming week. So for that reason, we will be selling British pounds pair. Where is it? British pounds pair this coming week even more based on the price action that we see. And on the weekly, we have breakup structure 1, 2, and the third one is being taken out. So we're anticipating that price may really drop if it wants to this level this coming week. So we're looking at that price level, which is the 1.2400 psychological level that we're looking at price coming to this coming week. So let's see this. And how far is that? So if you look at it, it's not that far away based on price, based on pips. That's about 260 pips, which is a great move for the week. If you get 220 pips, you'll be able to catch about 50, 67 pips for a week. That's a good trade. So that's what we're looking at. We can see that we're bearish on the daily, on the weekly. We're bearish. It's strong bearish momentum. So we don't want to even do more analysis there. That is very clear. And then we go to the 4-hour time frame. Now the 4-hour time frame is giving us market structure, and that's what you want to see on the 4-hour time frame. Let me just quickly show you what the market has done. First of all, let me fix this section break here. to visibility. Sorry about that. Doesn't have to show on all those range, daily, hourly. We just need it to show on the minutes. Okay, haven't done that session break. I normally use sections, market sections for that. So you can look at this low where price created equal lows based on this impulsive move. You can see this impulsive move here, tap out that high. And then if you see that this is when this low was taken out. So if we're to look at that, we can see that from here to this level is where we have price action. That's a strong drop there that happens. And then this low was broken as well. So we can see that from here to here, which is obviously here, price actually broke, give us a structure here. Now we have the new break. Price is reacting to this liquidity low where you have that liquidity level there. Price obviously has given us another strong, this is the momentum, this is a candle that broke, so another lower low. So this is obviously a bearish momentum to the downside, as you can see. So we'll just want price. I want you to pay attention to this. So we're going to mark 2600. This is 4-hour time frame. We're going to mark 2600, 1.2600 psychological level. Take note of this. 1.26 psychological level is our key area. There is our key area we're looking at. That price will break. Now, this is the strategy. This is the system. If the market wants to retrace, we should find a retracement to 127, back up, or even worst case scenario, 128 for the week. But without that market, of course, we have this impulsive drop that just happened. So this could be one movement to the downside. I can literally take this as one movement with my Fibonacci retracement. But at the moment, we're not saying that it's going to retrace until we see that. So let's say we use that Fibonacci retracement over here, and we expect price to retrace back into the 128,500, which I doubt the market will want to do at this time. So if the market retraces to 12800, that's where we should be buying. So as long as price trade above this psychological level, 1.2600, you stay buying. So that's what I'm trying to show you. So in other words, we are going to put our trend line here on this price action. Great. So now this is the area at which we should be expecting to take our profit. So what are we marking? We're going to mark 1.28500. That's the area we're marking, 1.28500. That's where we expect to take our TP if we're buying. So I'm going to mark that psychological level, 1.28500. I hope you are following this, because this is the area of interest you're going to be looking at, 1.2500, and we expect price to get there. And then if price break this 4-hour trend line and break it and pull up and retest, we are going to continue and take our TP there before we sell. So this is when price decides to break above and stay above 1.26 psychological level. All right. But if the price that we see breaks below, all right, if it breaks below this 1.2600, wait for a pullback and a continuation. You keep selling until we get to 1.23500. Because why is that? Because that's the previous low that we find in the market. The previous low, the nearest low that we could find in the market, which is 1.2500 or 1.2300. So that's close to 1.2300 right there. But I would prefer you get out 1.23500 right there. Okay? 1.23500. If price broke below this week, you can actually sell to this level. And this is swing trade. You can leave it and for the whole week. And if you are trading as a day trader, you take trade daily, then this is the range at which you're going to target selling price until we hit TP here. All right. So if price fails to break below this area and stay above, wait for the trend line break, confirming that this trend is exhausted and price want to retrace, and then you can literally buy to this key level here, which is 1.28500. So as it is, this is the setup for the week. Now, there is no proper direction at which we're going to say, okay, enter here or enter there. I have to give you area of key interest that you need to pay attention to, which is the psychological level 1.2600. You want to wait for price to break below that and continue selling. And if it is going to stay above 1.2600, you want to be able to see that this trend line is broken, and then you can begin to look for buy above. And then you expect to get out of the market at 1.25, 1.28500 psychological level on GBPUSD. So that's my take on GBPUSD. And let me look at EURUSD quickly before we, maybe if we have some time, we'll look at gold. Okay, let's look at EURUSD. Now, EURUSD is also the same behavior. As you can see that the market has been dropping extensively on EURUSD on the 4-hour time frame. Let's look at the daily, obviously, to see what it's like. Yeah, we can see that the market is closing down heavily on EURUSD. So we can see that this is a strong support support level that the market has gotten into. Multiple areas here that price reacted to. So first of all, I will mark that area on the daily. I will mark that 1 point. Where's that 1 point? This is the area I'm marking 1.0500, which is a random area here. Price action, random number, price action 500.05. And then you put it there. That's a very important area you want to expect price to react again, which is already did. You can see that. And price is coming back down to that area. This is the daily time frame. So you mark that zone, and also you want to expect price to stay below that. If the price go below that, where do we target? So we're going to look for another price action area on the daily time frame, which is obviously either here or there. There are two major areas here, one here and one here. Remember, this is daily time frame. So I will personally look at the overall movement that can be expected over the week. So the first thing is we have imbalance here, we have imbalance here. So these are just structures that can be tapped into easily. So the first thing is I will go for the second imbalance, this first imbalance level for the week. That will be my first TP area. If price began to drop for the week, I will look for that area. And that is exactly 1000 price action. That's a very strong psychological level there. So I'm expecting price to get there if it starts selling and then retrace back up after that. Now, this is very well described. So first thing is, let's look at the 4-hour time frame. Now, this is the daily time frame analysis. Let's look at the 4-hour time frame. Now, on the 4-hour time frame, the next thing you want to pay attention to is psychological levels on the 4-hour time frame, and also pay attention to the trend line. So the first thing is, if we're going to continue to the upside, this trend line must break. We want price to break this trend line to the above, and then we'll be looking at price action. Again, Fibonacci retracement will be very important to use here. Remember, we have a massive imbalance here as well, which price eventually filled to a little bit of half of that, about 38% of that. So we might take this whole structure here. First of all, let's mark this area as our area of interest, and then we want price to break and pull back into this area, which we have another order block, secondary order block at that level, price action on the pivot level. So we expect price to pull back up there by breaking the trend line, and then if we break the trend line to the upside, we should expect a retrace and a pullback and a rally up, whereby price will come to 1.0700 at this level, and then we expect price to drop and continue to the downside. But if that doesn't happen, then we should be expecting the opposite direction, where price break below this 0.0500, and we want price to break that level and expect price to come all the way down and retest and then continue downward, and then continue downward as we expect price to go even more to the downside until we hit our TP area for the week. Hopefully that becomes our area of interest where we can take out TP. But at the moment, it's just like GU structure is like, or where it's trading, we have to also look at trading GU EURUSD in that direction. But both of them are bearish as price is showing it. So all I need to do is to mark this retracement level, which Fibonacci retracement level as 1.700, and I'll mark that level as 1.700, which price may eventually come to as a retracement, and then we'll be able to look at price action at that level to sell when price comes down. Or you can decide to buy price easily to that level until price rejects at that level, and then you can sell. That's the first part. Now, in the second part is if price closed below this previous psychological level of 0.500 or 500,000 or whatever figures is there, but that's 0.500. You know what I mean by that. So in other words, if price closed below that level, I should be anticipating more sales. That's what I'm looking for. Now, price may drop a little bit lower and then rally up and start pushing up again, but always extend your trend line. As soon as the trend line is broken up to the upside, expect price to continue to retrace. That will be a retracement began, a resumption of retracement of this impulsive drop. And that's what you want to see. So at the moment, this is what we're looking for. You want to wait for price to break below the 0.500 less psychological level and then continue selling, or you want price to break above. If you break above this trend line, close above this trend line and retest, you should be looking for a retracement to 0.700 psychological level. That is on EURUSD. Okay, so I hope you understand this very well. We are still selling on every pair. Retracement is a minor pullback. You're trading against the trend. The overall trend of the market of both pairs are bearish still. Now let's look at gold. Beautiful, beautiful, interesting structures here. Gold has been a little bit consolidating for a while, for a couple of weeks, days now. He had this consolidation phase, but a massive drop that happened there. Let's look at the daily. And if you look at the daily, the massive drop that happened, not a big consolidation, we just have price drop extensively and breaking structure. So all we have here now at the moment on the daily time frame is that we are bearish. Gold just began to run bearish by breaking that trend line structure, and we can see that we are selling to a ball. Remember, gold is always a bullish market, so this drop may be done. So all you need to do is wait for a retracement. You want to buy. This is not the moment to sell sell gold right now. What you want to look at for is that gold retrace and then continue. Once it continues by reacting to price action around this level, and then you want to look for more sell. But at the moment, gold could rally up. It's done this before over the years. So don't be tricked to say, oh, gold is going to sell crazy. We're going to sell crazy. No, look at what it did here. Crazy do. Look at it did the same thing around this place. Look at that extensive drop by breaking market structure, and then eventually created a double bottom and rally back up crazy. That can happen also in this place. So don't be fooled. It can create some patterns here and then rally up. So as far as gold is concerned, this is a key zone. So I will mark that key zone which price reacted to. As you can see, that is in price 150 something, 40 something or so. Yeah, we'll put our key level here, right there. Wait for price to do its thing. So the first thing, as long as price is above this area, we're looking for buy. Don't try to sell it. As you can see, this doji candle, that's rejection from that key level based on this price action of order block. So let me just mark that area out so you can understand it. So this is an order block right here. So we have another block price right here. So you want to see that price stay above. If price stay above this line, above this zone, then you're looking for buys to the upside. So I will target this whole region as my TP area for gold. So here will be an area of interest, and then that will be TP1, and probably this area here, which is at the bottom, that will be TP2 because that is order block. So this is the area I should be looking at price to go with gold. Push up, continue buying, and like that, and then rally back up again. That's what I anticipate for this. But if that's not the case, then we'll leave it. Now, if price break below this line, I should be able to target this area here for a sell. That's area for sell. I'll be able to target that area for sell. And that's another beautiful opportunity to trade. So this is exactly what I'm looking at on the 4-hour time frame. If I go there, I'll be looking for price action to do this. So target this level for sell. If price break this small trend line, I'm going to see price break that structure there and then continue to the downside, or price stayed above. So what do? You mark the trend line, which is obviously there on the higher time frame, but that's the way we analyzed GU just now. We put that trend line there, and then this is massive swing drop that happened. So you put your fib there from here to here, a massive swing, and then you expect price a buy. Of course, you're going to buy up to this place until price decided to continue to break this high. You continue, you know that resumption has happened. So at the moment, this is what gold is like. I don't want to do much of the analysis on gold like this because it's a very sensitive pair, but I expect you to wait for price to come to this area, and then you can buy to this key Fibonacci level area, and then expect price to drop if he wants to sell more. If it fails and break above this 71 of Fibonacci retracement, and then you should expect price to rally even higher. And that will be a resumption of the buy. Because personally, I will be looking for buy on gold. That's what I'm looking for until otherwise proven. So that's what we have to do on this pairs. Thank you so much for watching. I believe you understand, and you watch this video again will give you clarity. And if you're new to our channel, hit the subscribe button, hit the like button, follow us on our Instagram where we share free analysis and free trade opportunities for everyone who is in that group. And I'll see you guys next week. Listen, trade carefully and trade wise. This is Trader Steve Brown signing out. Bye for now, guys.